And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, analyzing the price action, the charts, trends, patterns, anything that's happening in the news, including economic data, commodities, currencies, you name it. If it's relevant to the financial markets that day, we'll break it down, analyze it, and hopefully help you guys better run your daily routine as a trader. And welcome out to today's show. As always on our Tuesday shows, we have our guest here, the Queen, Coach Emily, is here to join us. Let's start with you there, Emily. How you doing today, dear?
I'm doing good, Tim. How are you? Like as Matt would say, not as good as the Nasdaq. Can I steal that and say I'm doing good, but not as good as the Nasdaq?
You can, not as good or not as bad as
not
the
as bad as the
Nasdaq.
Nasdaq. Yeah, sorry. Yeah.
Hopefully you're doing better than the Nasdaq.
I'm doing better
today.
than the Nasdaq. Yeah.
Yeah. And Matt, how you doing today there?
You know, I'm doing better than the Nasdaq as well, Em. So yeah, we're on the same page.
On the same page. So I mean, you see eye to eye.
And I'm getting a little buzzing coming through somebody's system right now. There, it went down. Good. We're good to go there. Mark, how you doing today on a Tuesday? Markets are selling off. Are you doing better than the Nasdaq as well, like Coach Emily?
I'm doing a whole lot better than the Nasdaq. So, I wish I had an example because Matt always, I like when he does.
There's got to be a range.
Yeah, I'm doing better than this, but
not as good as this.
Let me try.
All right.
I'm definitely doing better than the Nasdaq, but I'm not doing as good as Pfizer's earnings.
There you go.
There you go.
Yeah, Pfizer did post.
You do it.
Yeah, that's right. Pfizer did post earnings day. Coach Matt's going to break it down. Also raised guidance from what I understand. He was telling me about the report. Pretty strong report. I do want to talk markets here shortly and get right into it because, quite frankly, I got to dive into the analysis. You know, if you're out there, you're watching the show, come into the conversation. #Team Tackle. If you're a veteran of the community, you know how we do it here. And if you are brand new to the channel, don't ever be shy. Post your questions. Post your thoughts. Keep the conversation moving forward. And I will continue to engage you guys out there. Love the conversations we have in the halftime report. Markets are selling a little bit here today. Let's start breaking it down one step at a time and analyzing it. Matt, what's your read here on price action?
Well, on price action regarding the S&P, I mean, this is one of those days where you're going to have a fairly different view on the major market indexes with that violent rotation we're seeing in the Nasdaq here today. But the S&P 500 showing a little bit of weakness. Obviously, we're coming down into some horizontal support, and until this horizontal support level, obviously we violated that defensive posture we were talking about yesterday with the potential of that breakout that never did occur. Well, that's obviously violated. Now you're looking at the market trying to find its legs around that 4100, that 4120 level. And when you look at this on an intraday perspective, we'll drop it down into the 30-minute chart. Let's take a look at kind of what transpired so that we can all be on the same page. Now, first and foremost, when there's a day like today and you see a fairly aggressive sell-off in the marketplace, the first thing you try to understand is what is the causality? What is the catalyst that drove the market? Because you know, there's sometimes you're around the market and something minor happens, but all of a sudden it just bleeds into the market, the way algorithms work in the market, the way stop losses work in the market. And so sometimes you see this big downward movements in price, but it's really just caused by a brief shift in the wind, and yet it just triggers a fairly violent technical sell-off. And as of right now, you know, there's obviously some headwinds from an inflationary perspective and interest rate perspective, but I'm not sure that's what occurred here today, to be quite frank with you. When a lot of what Janet Yellen said about interest rates and potentially raising interest rates, I don't know what the Treasury Secretary is doing the Fed's job here today, but Janet, when she was talking about the potential of raising interest rates to combat the overheating of the U.S. economy, that wasn't at 4:30 my time in the morning. That wasn't at 7:30 a.m. Eastern Standard Time. And so I do think that we're trying to wrap some causation on the market that isn't exactly there, quite frankly. And so as of right now, because most of the news coming out over the last 24 hours is actually positive, guys. The economic news is coming out that's been fairly positive. Earnings, I mean, just take a look at Pfizer's and CVS's earnings today. They were really, really positive, responses to those positive earnings reports. So not a lot of negative news, not a lot of negative headwinds other than the inflationary conversation. But when you're talking about the inflationary conversation, Mark, and that's a little bit of the conversation that we're having as market participants today. Tim, what's the 10-year note? You're on mute.
I sure am. I was saying ZN or ZT. I always usually flip those back and forth. ZN, I believe, is the 10.
Okay.
ZT is the 2.
So if we take a look at this on the 10-year, Mark, when we were going through that inflationary conversation in February, this was the type of price movements we saw in the bond market. What are we seeing today, guys?
Now, you're not seeing that, right? In fact,
We're seeing a doji in the bond market today. We're seeing very little price response to it. So it doesn't make a whole lot of sense to me, quite frankly, for the market participants to be talking today about, oh, the reflation, oh, inflation, oh, interest, oh, what did Janet Yellen say, and wrap causation around a market selling off at 7:30 a.m. Eastern Standard Times, when we're not seeing how that type of conversation, how it impacted the market in February, having that same impact today. And so when you're looking at this from a, well, what in the world just transpired? And I'll be frank, guys, the first thing I try to find is causation. All the time. I try to find causation, and I hunted today trying to find causation. What was that coordinated news story that came out at 7:30 a.m. Eastern Standard Time, 4:30 midday in Europe? Not even the beginning of the real futures action, which is at 8:30 Eastern Standard Time. 9:30 is the cash open Eastern Standard Time. So we're talking about an hour before the market truly starts to wake up. There wasn't really anything out there. There wasn't hardly anything out there. And so what you're looking at here, you did have some European weakness start to sell off in Europe. We know the European economic data has not been nearly as impressive as the American economic data or even the Asian economic data. We did talk about how Europe is double dipping into that recession as the American economy is starting to really get fairly robust out there. So there could have been some causation with the weakness in Europe spilling over into the futures market here in the US. You certainly could have seen that, and it does make some sense to me. And we talked about this level of support, this defensive level of support. We talked about that quite a bit yesterday in the market as we were breaking down this from a technical perspective. And when you come out to the daily chart, you see how the market breaks out last week, plays defense throughout the entire week. It forms up that support level right there at 4170 multiple different times. And you see that technical trigger here. Market's not doing anything, just performing very, very normal. Once it violates that, look at the speed there. You get a fairly aggressive price action right there at 4:30 my time, 7:30 Eastern Standard Time. And it is coming into that support level with some degree of velocity. Support just gives out very quickly. And then look at the volatility shift here. Once you get underneath that 470, you know what's under there, guys. You can't see them, but you know what's under there. And you just got stop hunted, stop hunted, stop hunted. Because where do all of us put stop losses on analysis? Right underneath the intraday support levels. Once you got underneath that, the sell-off exasperated. And typically speaking, when you see sell-offs like this that are not based on some degree of important catalyst, what typically does transpire is the market will find that next horizontal support level. And so when you're looking at this violation of horizontal support, where does it come down into? Where does the selling start to get a little reprieve? 4120 by 4100, where your next level of very important intraday support is that zone of 4100 by 4120. Coming back out to the daily chart, you'll see that coordinates over here very nicely with some old support at 4100. This is the battle zone, guys. You break 4100, it's going to get a little bit more ugly, and the S&P certainly could be looking like the Nasdaq. But as of now, what I am seeing is this is a rotation out of the Nasdaq, sparked out of a technical sell-off in Europe. It's spilled into the U.S. and now the market's trying to, all of us market participants, I don't think this is just a tackle trading. I think this is out there around the world. All of us trying to figure out, okay, what specifically is transpiring today, and can it spill over into something else, or is this simply an overreaction? Right now, the Nasdaq pain is real. There's no doubt about that. That violated. There's aggressive sell-off in the Nasdaq. We'll take a quick peek at that here in just 1 second. But until you violate 4,100, we're going to see this as a dip that's going to get gobbled up. Let's be patient. You don't want to buy into a falling knife. This is a falling knife. Let's let that intraday analysis really solidify itself. And when you're looking at this once again on that 30-minute chart, as of right now, you got this as a bearish retracement on the intraday chart. As of right now, let's see how it performs at that first step at 41.20. The sell-off has slowed down. It's slowed down as we've gotten into some support levels that are fairly important. Let's see if those support levels hold.
Mark, what's your read on the situation here today? And Matt, that was a very thorough and very good, detailed explanation as to what you're seeing in the market. And I do appreciate the way that your brain tries to find that catalyst so that you can find those causation triggers. We'll talk more about tech here in just 1 second. But Mark, what's your read on market conditions?
Whenever you have a big red candle, I like to, once again, I'm like Matt. Matt and I are so similar in how we start in our top-down analysis. I was like, is this a market-wide event? What is this? And not just in equities. I look at what are commodities,
currencies.
Yeah. Because when you have those market-wide events, and you have these on a time, October of 2018. COVID, obviously, and things are market wide and everything's getting hammered. You go to crude oil today, pulled up CL. Not only is
it's threatening a breakout.
It's threatening a breakout. So that is the opposite of a market wide event. I go to individual areas of the market. If I pull up industrials, the industrial ETFs, the material ETFs, finance, energy. What do I see? I don't see big red candles. I see a whole bunch of dojis.
Well, and let's take a quick look at these sectors, Mark, just to kind of identify what you're seeing from a technical perspective. Once again, where the sell-off is really kind of located is in these 3 sectors right here. You have communications, which at this point you're looking at as a failed breakout, and now you're looking at is we got to reestablish support, we got to reestablish resistance, we got to reestablish a technical pattern that we can start triggering here. And comms, a failed breakout like this, comms, we saw that recently in staples. Maybe we can see something similar transpire here. You saw that breakout occur, that failed breakout. What happened? Came right back down into that horizontal support at 68.50, recovered itself quite nicely. So communications can recover itself quite nicely fairly quickly, the same way staples did. But again, you're in that falling knife scenario where you got to see that support level at about 75.50 hold. You do got a backstop right there at the 50-day moving average, which also has lined up very nicely in buy the dip type candidates back here in March, as well as back here in late January, early February. And so you got some fairly significant support between 75.5 down to that 50-day moving average right at 75. And so you could see this as a buy the dip candidate, but let's see how it performs at that horizontal support as well as that 50-day moving average. That could recover fairly quickly, but again, we're going to have to wait and see. Let's go to discretionary very quickly. Discretionary is attempting to violate its horizontal resistance, horizontal support level right there at about 175, 174.75. You're underneath that technically right now. You're obviously looking at this as a downgrade situation, very similar to what I was saying with the Nasdaq yesterday when you asked me the question, Matt, is there a substantial difference between the Nasdaq and what we're seeing in the rest of the market? And my answer was, not a resounding yes, but it was there is some subtle differences in this chart because you did have pivot confirmation, whereas, for example, when I'm looking at the technology chart here, you got a little bit of an M formation, that pivot confirmation. We talked about that in detail yesterday, and that was a little bit different from what we were seeing in, say, the Dow Jones, which was more just high basing consolidation. And so if you, it does remind me of the power of technical analysis, quite frankly, with what is transpiring here today a little bit. So coming back to the Nasdaq, or specifically the tech sector here, you had that pivot little confirmation coming in. We did downgrade the tech space over the weekend, given the fact that you did close underneath 140. And I talked about this yesterday in the sense that, in Friday, we were looking at that 140 level and we were saying, listen, we're going to downgrade if this is underneath 140. If it's above 140, we're going to maintain. It did close underneath that 140 level. We did downgrade that. That was the only sector we downgraded coming into the weekend. It did go from 15 to 20. You saw that just pick up. Once you see that get underneath these horizontal support levels, there's just not a lot other than just a little bit of hope for it to get back up above those levels. But you're really fighting up against the tide there. The tide there. This is coming down pretty aggressively. Let's see how it performs at that 50-day moving average. But guys, I unlike communications, which does appreciate its 50-day moving average, technology doesn't. Technology will violate that easily. Look at these. There's not a whole lot of buy the dip candidates on the 50-day moving average in technology. And it's just when volatility comes, technology is going to do whatever it wants to do. And then when you look at discretionary, very similar type scenario. You're underneath that horizontal. Maybe you fight back up and you get a little bit of buy the dip type conversations coming into the close today. But a little concerning in discretionary, very concerning in the Nasdaq, and obviously communications getting caught up in the sell-off as well. Communications is probably the one that can solidify itself the quickest if it really does form up on that 50-day moving average. Discretionary next if it does hold the 175 level. If it holds the 175 level, you're still lining up that breakout at 180 very quickly. The Nasdaq, in my opinion, we got to let this volatility subside and truly understand what is transpiring in the Nasdaq, because again, at this point, I am taking this as a technical event because we're not seeing the same thing in the rest of the markets, like the bond market, that would lead you to a reflationary concern or an inflationary concern. We're not seeing that play out. As of right now, you're seeing a violent technical sell-off. And quite frankly, I wish I had more than that. But guys, I hunted.
Yeah,
there's no coordinated news at that point. Every piece of news item that is being reported either transpired yesterday or transpired after the moment the selling started occurring, which typically does lead to technical sell-offs that exacerbated the problem once stop losses got hunted. And again, like I said, I wish I had a better causation today, but that's the evidence of what I am seeing is a technical sell-off.
Emily, let's get you in here next, just for your thoughts and your analysis on what you're seeing in the marketplace. Big red candle in tech. Matt just broke it all down sector by sector. How do you approach a day like today, Emily?
It's kind of like what Mark said earlier when he was looking at USO. It just really depends. Your day to day, it really depends on what area of the market you were in. It's like you knew. I'm in basic materials right now. I'm looking at basic materials, and I mean, we can run through a couple of stocks. NUE had a huge breakout yesterday. US Steel has already passed earnings and had a really good report, breaking out, sitting at that resistance level. We've got so many. PKG, I think, is also setting up well, if it hasn't broken out already. So it's really just a matter of where are you in the market and what are you looking at. Obviously, if you were really heavy in tech and communications, you're kind of feeling that pain today. But the important thing is to always make sure that you have a balanced portfolio and that you're not heavily into one sector or another, and also finding those bear picks as well to just kind of balance off that delta when you're bullish on the market. So it's just really finding those opportunities in those different sectors, because like Matt said, it looks like it's just really based in tech right now. So we just have to find other areas to play.
And once again, I come back to the occurrence in February, right? And again, we're what are we into this now? It's like 4.5, 5 hours right now. Like, let's give it a little bit of time here to kind of see exactly where the damage is. But as of right now, the damage is comms, technology, and discretionary. When you're looking at the other sectors, like Coach Mark and Em talked about, materials, what's there not to love in materials right now? I mean, gold got hit up against 1800. We'll talk about that, but I actually take that as a positive once that breaks out of 1800.
I have a special for Mark here. Actually, go back to back in basic materials, but look up CX. This is a Mark special. Those cheap, stocks that you can start to do naked puts on, sitting on that resistance level. I mean, it's just there's plenty to find in basic materials.
Good consistency there, and materials holding up very nicely. Look at that, just kissing off that 9, riding that 9, breaking out of a high base scenario. That looks really, really, really good. Energy, energy on the backs of some pretty decent reports out of Exxon, Chevron. Obviously, we're going to talk about Conoco's beat later on today as well. But here on energy, you're now back up above the 50-day moving average, above the 20, riding that 9. Look at the 9 now play a role, riding that 9, and now you're looking at this as a potential short-term reversal, horizontal breakout right there, 50 and a half. You're now above those levels, looking for some continuation, like Mark talked about with crude. Crude looking very healthy today as well. Taking a quick peek at the other sectors, staples showing a little hesitation at resistance. So what? Who cares? Utilities picking up the sell-off. That's a little concerning in utilities. Real estate, little doji sitting at support on the 9 EMA. Healthcare, doji and just inside candle. Industrials look sexy as all get out. You talked a little bit about some of those industrial components that also have the material kicker there too with steel. And finance looks really healthy with the nice hammer candle off 36, right where that 9 EMA is. So when you're looking at this from a broad market perspective, obviously a lot of what the news and the market participants, Wall Street is going to be talking about, because we know where the pain is, and pain drives a lot of things, is the Nasdaq, is comms, is in specifically discretionary, and a lot of brand names there. So obviously everybody's going to be talking about them. But as of right now, this is not a market event. This is a specific sector rotation. It's very aggressive. There was some concern going into it. There is not a catalyst as of right now that is coordinated. But as of right now, we're looking at seeing if we can recover there and hold up in the rest of the market. But as of right now, you're looking at the sell-off pertaining to those 3 sectors.
Mark, one of the very first things you said this morning was, well, crude oil is not selling off and crude oil is holding up, and that energy sector is looking good here. When you do have broad-based market sell-offs, do you tend to see sell-offs also in crude oil and the commodities as well? And is that one of the reasons why you were reading it the way you are here, Mark, with crude oil?
No, absolutely. Absolutely. It's a gauge of market fear, right? Like sometimes there is just genuine fear out there. And when there is genuine fear, it impacts all markets. And we've seen, how many different rotation stretches have we seen in the last year? A year ago, it was, stay at home versus tech, and, it'd have days depending on COVID headlines. So we got a lot of experience in the last year on rotation. But when it comes to like market fear, like, are people scared? That's where I try to look at as much diversity in marketplaces and in sectors as possible to see, is there a real fear out there? There's not real fear. I mean, if you have an all tech, you're not enjoying today, and for individuals that have, tech trades, it stinks today. There's no doubt about that. But as far as real fear in the marketplace, and I think that's an important gauge because that can spill over to your whole portfolio, you're just not seeing it in the price action right now.
If there was real fear in the market, I believe gold would be at 1850 today.
It would have broke out, right?
It would have broke out.
Yeah. Well, speaking of which,
and that's not what transpired on gold, like at all. Gold's had a volatile ride today, no doubt. But as the selling started picking up in the market, look at gold, same time frame, 430. Gold started going up. Well, as the market continued to go down, if this was a real fear-gauged market, guys, every sector would be down. They wouldn't be recovering. And gold, once again, coming back to GC, gold wouldn't have dinged 1799 and got blasted back down. It would have broke out and ran. So, no, this is, to me, as of right now, with what we're seeing in the currency, the bond market, as well as gold and crude, this is not a market sell-off type fear moment. You have too many things that are stabilizing or going up that typically get hammered in those environments, or see fairly aggressive price appreciation like the 10-year note and gold does. We're just not seeing that. What we're seeing is a coordinated technical sell-off at 7:30 a.m. Eastern Standard Time, and we're seeing it pertain specifically to the Nasdaq that bled over into the rest of the market, but we're not seeing the rest of the markets violate support.
Mhm. Well, and you made an interesting point earlier about that 1800 level, Matt. We were talking about gold and its price response as the markets were selling and how it was firming up. But the fact is as well, it's hit now 1800 almost to the penny, like 3 times in the last 2 weeks. That now is solidifying that as a potential trigger for a bullish upside trade. That's the longer it does it, the better
It's
that
almost
trigger
like
is.
technical analysis works, right? I mean, you got to learn technical analysis if you're going to succeed in the market, whether it is learning how to play support levels that break and add protection, or identifying resistance levels and managing it. Yeah, I mean, one of the first things you said this morning, Matt, you should have a market order at 1801, jokingly. You said.
I said 1801 cent.
Yeah.
And no, that's a little too aggressive for confirmation.
Yeah,
but
yeah.
my point remains, yes. And to me, I mean, and I know some people will look at this sell-off on gold and be like, "Oh man, that's nasty." And I'm looking at that sell-off in gold, and I'm just saying, "Oh no, 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 no,
Mhm.
no, 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 no! You don't understand the power. Once that breaks, there's nothing.
Yeah.
It's bye-bye. It's gone. Sexy. It's good. Get excited. Line up another week. I don't care. That 1800 level is saucy for me.
Yeah, and even if it chops in here a few days, I don't care. Week, whatever you say. I mean, as long as it's holding trend line, moving averages, pivot points, that
You can't
breakout
pick
is
when gold
developing.
wants to break out.
Nope.
The
You
same way you
cannot.
can't pick when the Nasdaq wants to sell off at 4:30 a.m. my time.
That's right. That's right.
What, I couldn't have stayed up another 30 minutes?
I saw the
Literally.
sell off and then turned the news on
Seriously.
and saw no catalyst as well at 4:30 in the
Like
morning.
I go to bed at like 4 and I'm like, okay, we're good. I wake up and the end of the world had happened. Like 3 hours later, what are we doing?
I think we're going to be all right. Quick look at the dollar, Bitcoin, then we're going to get into stock talk. We got a few earnings to round up here today, and we are going to play another edition of the Queen's Court. Got a couple of stock ideas we are going to submit to Queen Emily, and she will judge us harshly. Let's see if she's feeling a little leniency on a day where tech is down. Maybe she'll go soft on us. I'm not sure. Probably not. Probably she'll want
No.
blood. But Matt, the dollar kind of just hanging out down here in the bottom. It broke below that support point at 24.60 that you identified about a month ago, actually, when it was on the sell-off. Now we're kind of just hesitating, rolling momentum into sideways. Any read on the dollar here that you want to add?
No, Australia kept interest rates the same at 0.1%, and they raised their GDP forecast.
So what is the carry between the Aussie and the dollar? Like
It
zero?
doesn't matter.
It doesn't matter anymore. Bitcoin.
Thanks for ruining a great trade, guys.
It used to be good.
The carry trade was the most popular trade in the world.
Carry
It was like-
trade used to
like guaranteed cash flow. Are you kidding me? Guaranteed cash flow. And now it's like, thanks, guys.
Mhm.
Thanks.
Thanks, central banks. We
It's
appreciate
literally
it.
the same conversation that some people are having today, being like, I was taught to save for 40 years and now I'm getting zero on interest rates. Okay.
Yeah.
Okay.
I giggle every time American Express sends me another marketing info about 0.5%
Like-
high yield interest or something. I'm like, okay.
We have embraced this. Hey, unless it's zero interest rate, things are terrible. And it's like, well, high interest rates actually does help certain asset classes
It
and
does.
certain individuals.
Yeah.
So
That's right. That's right.
Don't worry,
Quick
it's just transitory.
transitory inflation, no problem. Currencies are all going to be just fine. Fiat forever. Is that what you're saying,
keep
Michael?
begging for zero interest rates until you're 70 and you're getting that zero interest rate on that savings account.
That's right. That's right. Last look at Bitcoin here, then we'll go into stock talk. By the way, Ethereum just kept its juggernaut run over the last couple of days. It actually hit an all-time high. Hesitating here at the top.
The new
right
sell
there.
is the Doji in Ethereum.
Do sell is up 1% on a doji. Bitcoin stuck in a range though. We've been talking about this for a while. It's had a changing character in the trend since the failed breakout occurred 2 weeks ago. Nothing that has transpired within that white box is going to tell you anything besides chop, consolidation, and continued short-term unpredictable volatility. Matt, anything you got on Bitcoin for here?
No, you said everything that needed to be said.
Yeah, I think
I
so.
mean, this range could last a long time.
Well, it lasts however long it lasts, right?
Long-term investors would love this range to last for the next 5 years.
It would be healthy.
Hold Bitcoin up here. You're
It's
going
not going to do
fine.
it. I'm just saying it's
Yeah.
Who cares? Long-term investors hold
If
45 to
it does
65K.
if it
Yeah.
does hold till December, I win the bet that Bitcoin would
Listen,
be at 50K.
and if it doesn't hold till December, and hold on. If it doesn't sell to December, my prediction of it breaking out, going to 50K, selling back down to 25, will be like, did he have a crystal ball on this one?
All right. So what if it goes to 25 back up to 50K? Who wins then?
I'll say I was right on
I
that one too.
do.
Because everybody
I didn't
gets a
give the
pick.
Everybody
wait a
wins.
second. I didn't give the third leg of the analysis. I just said it will break out, go to 50K, come back to 25. That's all I said.
Sure. Sure. Those prediction podcasts are fun. There's a lot
Oh,
left
they're
in
so
this year.
silly. They're so
to-
silly.
Yeah, try to predict out 12 months in advance, but we have some fun
In
with it.
Bitcoin, of all
Of all things.
instruments.
Yeah, who had Doji?
I'm going to give you my range. It's from 1 cent to 1 million, or between there. It's good.
Right. Let's move into stock talk here next. And by the way, if you're out there watching the show right now, I got a good audience coming in here today. Appreciate you guys. One thing I like to do every now and then, I think it's a great symbol of our community and who we are. Just where are you watching from right now? I obviously always broadcast from Salt Lake City, Utah, where I live. But where are you at out there right now? Are you in Florida? Are you in Canada? Are you in the UK? You across this world? Let us know. Type that in the chat. Let's keep the conversation going. Matt, you had a couple of stocks on earnings roundup. There's not a lot of companies today, but there were some that grabbed our attention. Where do you want to start with earnings here?
I only got 3 in, so let's start with ConocoPhillips here. We were talking about the energy space. We're now getting into most of the energy space. The big names have now reported, and quite frankly, it's been a pretty decent earnings season for the energy space. ConocoPhillips comes out today, reports 69 cents a share versus the expectation of 57 cents. So a nice healthy beat on EPS numbers. Revenue came in really healthy right there at 10.6 billion versus the expectation of 8.1 billion. And that revenue, that increase in revenue, which is very impressive in just the raw numbers. They beat both top and bottom. But revenue numbers exploded. Now, again, before I say the number, because it's a sexy number, there is context, right? Last year, we were doing nothing. This year, we're doing things. That's the context. Revenue exploded 119%, guys. Very good report coming out of ConocoPhillips. And I want to go to Mark very quickly. You know, Mark, we've been talking about the weakness in energy, and let's go to energy very quickly. We've been talking about the weakness in recent history in energy as it, was in really healthy, great trend, started showing weakness, double bottom, violated that support. We actually downgraded the energy space, very similar to the technology. Once it closes underneath horizontal support, you're going to downgrade. We downgraded throughout all of this, but you're now starting to see the recovery. And 2 weeks ago, you and I were talking on the halftime report, talking about our belief to a certain extent in the energy space and the stabilization argument. But we were also saying that, we got some very important earnings reports coming out with Conoco, Chevron, now, and obviously Exxon Mobil. You got the European counterparts in Royal Dutch and BP. We're all past that now. These reports have been pretty impressive out of the energy space, and I know there's been more impressive raw numbers, but it just, knowing what energy was going through last year to where they are today, I'm just very impressed by their recovery, quite frankly. We're now starting to see the European counterparts start to reward the investor class for sticking with them through that pain and trials and tribulations that everybody went through last year. We haven't really seen the American counterparts outside of Chevron reward the investor class with an increasing in dividend. Now Chevron 5%. But again, raw numbers really healthy coming out of the energy space. Mark, has earnings solidified your belief from a fundamental perspective on energy continually to recover post pandemic and perhaps maybe catch up a little bit to the front running that crude has been doing over the course of the last 9 months?
Yeah, listen, I not only have earnings been something that I've really enjoyed as far as, because I've shared my thesis, and pro members know in the I've been very pro oil for a long time now, 4, 5, 6 months. Last Monday on the halftime report, I shared that in depth. And I have a thesis, and I believe that companies will have cut costs, that the reopening and inflationary pressures put oil, and the combination of those two things, along with Saudi Arabia playing nice, is going to lead to, at a minimum, really good cash flow environment with directional opportunities also presented themselves. Earnings have not only confirmed for me that thesis, they've strengthened it. I was actually surprised at how much cost cutting occurred. If oil stays high, and I think in this inflationary reopening economy, economy, I don't think there's any question that it's going to stay in a higher range where companies can make money. I think that's going to translate into healthier dividends down the road. I think that could translate into stock buybacks, both bullish for energy companies. I'm a fan, and I'm overweight energy in my own portfolio. Will continue to do so, and we'll continue to look to add. I thought the earnings report, you have a thesis, you want to see confirmation. I think earnings provided that confirmation.
Well, and sometimes you get confirmation bias, right? That's not happening here. That's not happening here. These energy numbers have been extremely impressive. And if you had to pick, right, we had in the last just few days, and I'm just going to list out the three big companies that I've talked about from an earnings perspective. If you had to pick one, and you can combine whatever analysis you want, Exxon, Mobil, Chevron, and Conoco. So you got Exxon Mobil here. We know what the energy space is doing.
Oh, no.
You have ExxonMobil post earnings, very similar to the energy space, right? You have CVX, Chevron, very similar to the energy space, maybe underperforming Exxon a little bit in price recovery. And then you have obviously Conoco here. Which one would you pick?
I will save my answer for the Queen's Court.
Well, then you better go first, because this is stealing my thunder. I actually was thinking the same thing. We'll see who the Queen lets.
All right. Well, then we will answer that question in the Queen's Court there.
Yeah.
Let's move on to CVS here. CVS reports earnings of $2.04 a share versus the expectation of $1.72. Revenue also came in above expectations at $69.1 billion versus the expectation of $68.4. Revenue increased 3.5% year over year. Breaking out, running a no-sell day here on CVS Corp. CVS once a Tackle 25 stock. CVS also one of the only stocks to ever get removed from the Tackle 25 during the actual calendar year. They had a horrific earnings report one year a couple of years ago, where it dropped 30%. And
19,
I don't even think very rarely says what I do at the Tackle 25. I will not remove a stock from the Tackle 25 for bearish trends, increasing volatility, unless the fundamentals change and unless the underlying fundamentals change of why we put that stock on the 25. We do not remove that until we do the end of the year review. And because we do cash flow strategies with it, right? Mark, you're a cash flow expert. Em, you're a cash flow expert. Do we care if great fundamentally strong stocks go down in the short term?
I welcome it.
Okay, so we do not remove for that, but we remove on a negative earnings report where it gets killed by 30%, correct? So that's CVS here. I just wanted to give a little bit of backstory to CVS.
Mm-hmm.
Now, CVS is having a little bit of an opposite response to what I just said here today. Very, very good, healthy numbers coming out of CVS, in my opinion. And look at this weekly chart here. Wide range neutrality, horizontal resistance, breakout on a positive catalyst, typically leads to what, ladies and gents?
Increased price appreciation.
More price discovery.
Yeah.
Price discovery. And so it's going to be interesting, but you got to love this this price response on a breakout out of a nice ascending triangle daily pattern, cup and handle weekly pattern. You got to like that horizontal breakups of resistance, and technically little challenging towards the highs here. Could see some momentum, but we are talking about CVS and not some tech stock. But there's no tech stock doing that today, so we can't analyze it. Let it settle down. But this is a radar. This is a watch list candidate, in my opinion. Positive response, technical breakout here. Fundamentals got decent valuation, nothing too concerning there. It's a watch list candidate for me. What do you guys think of CVS post earnings?
I'll go first. I mean, I love the technical breakdown you're showing us there. I mean, CVS is not a stock, you're probably going to short-term swing trade, but I have had it on my list and traded it in the past. I remember when we had it on our Tackle 25 list, and you are right. You rarely do remove a company. That was just a horrific report. I'm trying to remember what quarter it was. Q1
It was Q1
2019.
2019.
I think so. Yeah. But this is a long-term
By the way,
reversal pattern.
I'm going to put you on the spot. Can you remember the stock I added?
Yeah, I do. As a matter of fact, Garmin. We put Garmin.
It was Garmin.
Yeah.
And look at Garmin.
Yeah. Yeah, we don't take those decisions lightly. I mean, Matt
We do not
sets a
take those
standard
decisions lightly.
on the Tackle 25 for that reason. So CVS has had a couple of years where it's been building this reversal pattern. That pivot analysis that you just went through developed into a very, very nice breakout post earnings. So how you approach it, I haven't mapped anything there. I'm in management mode today mostly, but I do like it. I think you can stick it on a watch list, which is the first time for me personally I could say that about CVS in a couple of years, Matt. So
yeah, I agree with that, Tim. And the simple reality is you got a positive catalyst on earnings, and you're breaking out of a horizontal with a very horizontal resistance, wide range neutrality with a good consistent trend on the daily coming into that weekly breakout. I think it's a watch list candidate, and let's see how it performs above 77. I don't think you chase momentum in healthcare like ever. That's just not me.
yeah.
But I do think you let it settle down and see if we get a snapback, see if we get inside candle analysis, we can start mapping out a swing trade. And although typically I do agree with you on swing trading CVS, I think with the type of trend we're looking at, a swing trade is legitimate here. But I'm looking at this on a weekly, and I'm looking at more position style analysis on CVS here. And then the last one I have, by the way, CVS was almost my Queen's Court pick. Almost. But you know what CVS didn't do last year?
What?
Save the world.
Who did?
Pfizer. Okay. Pfizer here starting to pick up steam. Their vaccines. Who do you think is the most important vaccine out there?
Well,
I think it's Pfizer.
Pfizer, Moderna, those two.
Yeah,
But
Pfizer, Moderna.
Pfizer, maybe even most. Yeah.
Yeah.
1A,
Well,
1B.
Pfizer was just stuck in mud for a very long time. We're finally starting to see some life in the short-term trend. As you can see, the consistency is picking up a little bit in Pfizer. You actually had some momentum here. Horizontal support level form, front running into the earnings, and now a positive response, although muted, a positive response to the earnings numbers. Let me give you those earnings numbers very quickly. They were impressive. Pfizer comes out at 93 cents versus the expectation of 79 cents. Revenue came in at 14.6 billion versus the 13.6 billion expectation. That did result in a 21.2% increase in revenue from a year-over-year perspective. The raw numbers are really healthy out of Pfizer here this morning. However, doesn't tell the story because it is the guidance that tells the story here. And Pfizer just had a massive, and Tim, there was no trick here.
They weren't trying to just
There
trick the
wasn't no
system.
trick here. This wasn't some micro stock company that's trying to trick algorithms. This isn't that. This is a legitimate increase in both EPS and revenue guidance. Pfizer came out today outside the raw numbers. The guidance was supposed to be in the 310 to 320 for next quarter. They increased that to 355 by 365. So a legitimate increase in EPS guidance. However, revenue was supposed to come in similar to what we saw here. What we get here today out of Pfizer, 14 billion. Well, we were supposed to look at, and these are your numbers, we were supposed to look at the revenue in the 59 to 61 billion range, right?
Mm-hmm.
Substantial increase to 70 to 72.5 billion. And so we're
For the year. Okay. Yeah.
So we're talking about substantial increases in both EPS and revenue. And so when you see this, right, you see a beat on EPS, you see a beat on revenue, and you see a utter destruction of that guidance. And we call that the triple whammy, right? A beat, and a beat. Nothing to be upset after Pfizer's report. I like Pfizer. I like Pfizer, the consistency of Pfizer coming into the report. Technically, I think it's more consistent today than it has been in recent history. I like Pfizer as it's gotten up against its weekly channel. As you can see on the weekly chart here, just stuck in a range, stuck in a range, stuck in a range. What happens? Breakout. That was a vaccine headline, by the way. Breakout, maintain above that breakout channel, positive catalyst. Unlike volatility shifts.
Is that
Did we,
muted?
did we
Because I
lose
think
young
we
Matt?
lost Matt. We
I
did.
think we did. We might have lost Matt on his Wi-Fi or whatnot. Pfizer analysis here. We'll have to wait for just a second. We'll keep talking while Matt sees. We'll see if Matt can get pulled back in here shortly. Mark, what's your read on Pfizer here after Matt's been breaking down the
Listen,
numbers?
anybody that has listened to me at Tackle Trading Pro members for 3 years, that's about how long I've been with my brothers at Tackle Trading, knows I'm a huge fan of Pfizer, and I'm a massive fan when Pfizer gets in the mid to low 30s, which it does several times. I love the company Pfizer. I love it from a boomerang perspective. I love it from a healthy dividend perspective. And then you get a report like this. This is one of those, you know how I hate higher prices. It's like, am I going to, because I've enjoyed when Pfizer's dipped into the mid to low 30s to take advantage of that. I'm like, am I going to get to have that again? That's a really strong report. Is the mid to low 40s the new mid to low 30s in coming years for Pfizer? I just very comfortable with Pfizer from a boomerang. If it went to 25, I'd be like, that's great. That means I get a huge, massive dividend yield on a great company. Love the company, love the report.
Yeah, it was a really strong report. There's several other notes I thought were interesting in the report as well. The revenue guidance Matt was telling me about even this morning in pre-production. That's just really impressive for a company like Pfizer to increase revenue guidance by 10, 12, 15 billion dollars for the full year. And a lot of that is on the back of the vaccine. They expect to continue to sell that vaccine in the future, by the way, and they do see consistent demand picking up. So now they've got a new little revenue boost for their overall business. And they also did announce they're going to open up the vaccine to kids now. So 12 to 15-year-olds are going to be eligible for it here very shortly, and they're trying to get full FDA approval. Pfizer has a really interesting trend developing, higher pivot low, breakout yesterday, didn't get any selling pressure here today. And with a strong report, I think you got to be interested in the company. I think we may have young Matt coming back. So before we move on from Pfizer, Emily, what are your thoughts on Pfizer here?
I definitely love the earnings report. Definitely love where it's sitting at right now at those resistance levels. Definitely adding it to my watch list.
And Matt, do we got you back here?
I don't know. I had an internet spike, so I don't even know when I stopped talking and when you guys stopped listening. I have no clue.
I grabbed the baton and I picked up the screen. We started just talking about your analysis on Pfizer, specifically the revenue guidance being as strong as it was, added Mark's insights. So we got most of what you were saying about Pfizer. You've been DC.
All right, if you have any questions for me, you better hurry because I'm going to get cut out again.
Anything you want to add to Pfizer?
No, I don't know what you guys stopped lists. I have no clue what you guys.
I think most of what
we did.
Most of what you said.
The only thing I said at the end was Pfizer's my Queen's Court pick.
We didn't hear that.
So this is his pick for the Queen's Court, which we're going to be moving into here shortly. So Queen, you already know one of the offerings for your court here today. And I think that was the earnings roundup. Matt, do you have any other companies grabbed your attention?
No, I had Pfizer, CVS, ConocoPhillips. Pfizer to me was the best of the bunch from an actual raw numbers perspective, but earnings today were actually fairly positive, and it goes in line with what we've been seeing this quarter.
Couple of quick stories before we go into Queen's Court. Tyson Foods is moving more into the plant-based, diet type of products. Obviously, they are famous for making their chicken and their beef products and all of those type of things, marked packaged goods and food products. But they do want to compete with Beyond Meat. They saw some sales and revenue increase from a very small segment of their company last year. They're going to try to sell 2 patties for $5 for a plant-based burger through grocery stores. I thought that was an interesting note.
It's the equivalent of legacy auto manufacturers getting into EV. It's just you're going to see this with packaged food companies all over the place. It's just the natural course of evolution of this area of the market.
While we're on food, I saw Goldman Sachs downgraded both Kroger and Albertsons here today on the very same day,
I
Mark.
saw that too.
Basically citing that the rising food costs, rising food prices are going to put pressure on supermarket profit margins moving forward. It did at least make a little bit of sense to me. Mark, this is an area of the market you do track, grocery stores, those type of things. What was your read on that news?
No, I mean, and this is like, and I don't think it's just grocery stores. I think it could bleed over into packaged food companies as well, because I thought their analysis could have been cut and pasted to your Procter and Gamble's, to your Campbell Soups, to all of your packaged good companies. I literally thought they could have cut and pasted their analysis on margin pressures, because listen, as Warren Buffett said, inflation is up, 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 4 ups for those counting at home. And that's in materials everywhere, and that's in food, and that is in components, and that's in the everything. And so those margin pressures, they're going to get passed on to the consumer on some level, right? And it's like Costco, how they're passing that on by reducing the amount in some of their bulk goods, keeping the same price, but you get less for it to hide that inflationary cost. Those margin pressures are real, and if inflation continues, if prices continue to be up, 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 margin pressure is going to be a real thing, not only for grocery stores, but for packaged good companies as well.
Another one here that was in the news, Coach Emily, you mentioned your love of material stocks earlier. It's one of the focus. You like to have a broad-based portfolio. You'd even mentioned Nucor, some of the other ones in here, including U.S. Steel. U.S. Steel did catch an upgrade here today from Credit Suisse. And I thought the client note was very interesting from the guy at Credit Suisse who was talking about it, Kurt Woodworth. He was basically saying steel's in a super cycle. We're going to see upward price inflation. We also have the infrastructure things coming down the pipeline, give it a good big buy rating. And obviously steel is performing well here today along the backs of many components in this industry. Steel's a popular one, cash flow darling for many traders. Emily, what's your thoughts on the steel industry right now? Is this one of your focuses?
Oh yeah, absolutely. Steel has been one of our, taco favorites. It kind of fell out of favor, when it started having that downtrend, but it's back in our favor. It's back in my watch list. I've been looking at this and, looking to either sell naked puts or get into it on a long-term basis. Still trying to plan out what I'm going to do with it, but I'm waiting for that breakout to happen, and then we'll take it from there. But definitely love this sector. Definitely love U.S. Steel.
Mm-hmm. Gotcha. I do as well. I think it's a fantastic area of the market, and it's been heating up and looking pretty good. And if you even look at many different components in the steel sector, because I know a lot of people out there, they just love X. They love U.S. Steel. Guys, there's other choices. Nucor, like Emily talked about, this was a beautiful breakout. It's been on our option report several times, Emily. We love the company, and it's had a tremendous run, right?
Mm-hmm,
I see you smiling
absolutely.
over there. I see you smiling over there. And then even one of my favorites on the Dirty Sexy Money list, Cleveland Cliffs, developing into a really nice potential breakout pattern as well. So you got your pick, dealer's choice within the steel sector there, guys. And that's really
and I think these charts, right, you're having a big red candle in the market today, and you're finding trades and you're finding opportunities. It's not just a stock picker's market. It is a stock analyzer's market. And I really do believe that going forward. And I'll talk a little bit of this about developing. The thing is, we talked about this in Queen's Court last week with UPS, developing a thesis, developing a game plan, and then, looking at technicals to help give us specific entry points. So, the market can do nothing. And once again, this isn't real market fear. Can it bleed over and create some havoc in the short term? Sure. And that can affect really short term trades, especially things that might have May expiration. But, I really do believe that this is a stock analyzer's market. I'll get more into that point here in a second.
Well, let's move right into that point. And what we're going to be doing next here, guys, we broke down the news. We're going to have some fun now. We're going to move into the court here, the Queen's Court, which we've been playing this little game every Tuesday on a weekly basis since Emily started joining us on Tuesday, where each of the coaches who are attending the show that day bring a stock for analysis. They submit the stock for analysis, break it all down, review it, give you the detail as to why they like it, maybe even some ideas on how to play it. And then the Queen makes a decision whether or not they get to live or not, or whether they get their head chopped off because they're bringing a poor pick or one that she just doesn't like, or maybe she's just in a bad mood. Who knows what is going on that given day. I've had my head chopped off a couple times, so I'm hoping to bring something good here for you today. Who do you want to go first here, Queen?
Let's have Mark go first, because we had that question posed posed on ConocoPhillips and Exxon Mobil, and was Chevron.
Mm-hmm.
So I want to hear his analysis on that.
And if you didn't catch it earlier, before we get going started with Mark, Coach Matt did submit Pfizer as his pick and analysis. And Emily, he's not here. He ran for the door, so you can't even chop his head off at this point.
I can still chop his head off. I mean, he already gave me the analysis. I already know where his head is at, so I can chop him off. So he doesn't have to be present to be chopped off.
So Judge Matt's analysis first. Does he live?
You don't tell the queen what to do. The queen will do what the queen wants to do.
Mark goes first.
All right, fair enough. All right. What do you got, Marky?
All right, and I really do, the older I get, listen, I'm not as much of a short-term trader as I used to be. I like position trades, I like investing, and I'll use short-term technicals to help guide my decision. For example, you get a support break on broad market on tech, I'm going to reduce exposure. Whenever I have a broad area support break, I'm going to reduce exposure. But I really do believe in this concept of analyzing and creating themes and creating theses based on logic and facts and everything that you can put together and make it a thing, and then sticking with those as long as all of the facts support those. And I talked about this last week with UPS, how I explained my whole thesis on UPS, why I like that area in the market. Had a pretty good week. Now any given week, it doesn't change your thesis, right? But you like to see positive price action, especially when it goes well. Well, with energy, and I've shared this many times, my thesis over several months has been you're going to have an economic reopening that is going to help fuel energy cost. You're going to have an overheated economy, and those raw materials, and you go look at raw materials all over the place, whether it's corn, whether it's copper, whether it's palladium, whether it's lumber. You've seen some parabolic moves. Now, we haven't seen parabolic moves in oil. We've just seen really healthy price appreciation. Now, so we have all of the components on oil that create a positive backdrop. Now let's talk inflation. Number 2, invest in vehicles that do the best in an inflationary environment, copper and oil. Copper, really nice run, still room to run. Oil tends to do very well. I don't know what's spooking tech. I don't know. I don't have the exact causality. I know there's a lot of things out there, higher rates, inflation, this and that. I do know that many of those core things that are spooking tech, they serve as positive tailwinds, not headwinds. Headwinds for tech, tailwinds for oil, tailwinds for energy companies. I've had this thesis, I've shared this for months and months and months. And then every once in a while, you're going to get negative price action. And people are like, listen, has anything changed in the thesis? The answer is no. And if nothing changes and you're right on your thesis, you're going to get some positive price action. Now we get down to the specifics, all right? So yeah, got this really, I think, logical, sound thesis behind oil and energy companies itself. When you talk about valuation, another thing that is spooking the market with valuations and talks of bubbles and this and that, that ain't not the case with energy companies. You have very healthy fundamentals. You certainly aren't overvalued, both from a classic fundamental standpoint, but also from a still got room to run on the chart. A lot of these companies, and my pick's going to be Exxon Mobil, XOM, they still got room to run, even if you just use basic rudimentary metrics, like compared to where things were pre-COVID. The fundamentals on oil companies as a whole are dramatically improving. The thesis behind crude oil, if you have inflation, which guess what? You do, and it's going to continue for a while, oil benefits in that environment. You still got room to run on the chart. Now, the kicker is, and why I chose Exxon Mobil over the other oil companies, in looking at their raw numbers, Exxon Mobil did an absolutely fantastic world-class job at cutting costs. Their CapEx expenses right now, I was surprised at how low they were. Now, this is part of the thesis, right, that I've shared several times, that, energy companies, out of a need to survive, were going to have to reduce costs. Boy, they did so and then some. Now, reduced cost, higher oil prices, economic reopening, that's going to lead to a lot of cash flow, genuine cash flow, the ability to pay down debt. And as they pay down debt, improve their own cash flow, they create a wonderful situation, because while you love a price appreciation, and short-term traders, you do, that's not, nor will it ever be, what energy companies are to me. They are a cash flow, healthy dividends that are going to get restored, maybe even bumped up like our European counterparts, buyback situations, which are a form of dividend, and if you get some price appreciation along the way, great. You can sell those covered calls, even out of the money. And for directional traders, and once again, I don't directionally trade, but when I get candlesticks in situations that say, uh-oh, we might get some upward price appreciation, we're getting that on the chart. Looking at the weekly chart on Exxon Mobil, that's a 6-week short-term consolidation pattern that you are up. Hey, what's the market doing today? What's Exxon Mobil doing today? I think how you are doing today has a lot to do with where you're exposed. Energy companies healthy, and I think when you are this strong counter market, that's a healthy sign. Chart's healthy, the fundamentals are healthy, the fundamental thesis was only strengthened. I think there are times, and I love Matt's pick, by the way, in Pfizer, there are times where something feels like this could be as cheap as it gets for a while. UPS felt that way. Silver feels that way to me. Pfizer feels that way to me. And I think some of these big energy companies feel this way as well. I present Exxon Mobil as my pick for the queen.
Well, thank you, Mark, for that wonderful analysis. I told you this last week, I love this type of mark. You go through the thesis and explain your game plan and why and all that good stuff. I absolutely love ExxonMobil. I already have it on my watch list. It definitely a great cash flow candidate for me. It's my style of trading. I don't like, stocks that move up too much when it comes to cash flow. I can do directional trades on those things, but and the range where it's sitting at right now, I absolutely love ExxonMobil for a cash flow, long-term cash flow strategy. So Mark, for the second week in a row, you get to survive because you sold me on my key things: cash flow, dividends, your thesis. It's in a sector that's doing really well with the reopening theme. So absolutely love it. Thank you very much for.
Yeah, and the thing about, it's funny from a trading point of view, Emily, because like you love it for the same reasons I love it, right? Because this isn't a 6-week trade. I'm not trying to make money today off this. I love the price stability. I love the thesis. And I love it when I can look into the future and cash flow for months and months, maybe years and years. And if I get some upward price appreciation bonus, which the chart is pointing to that. So there are short-term trading opportunities, but that's not why I love it. I don't think that's why you love it. I don't think that's why I'm living today. So.
Yeah, ExxonMobil is one of those where, if once it gets going, if it ain't broke, don't fix it. So you can literally cash flow on a stock like this for quite a bit of time before it starts to give you any sort of, reversal or anything like that for a while. So
let me get this right. Matt left. He's running through the hills in the countryside, and he escaped the Queen's wrath.
He didn't escape the Queen's wrath.
He's taking a nap because he got the day off because his Pfizer analysis was spot on. That's probably more accurate. Mark has already lived, so now I'm probably the human sacrifice again. Okay.
Well, okay. Let me tell you why you do this to yourself every single week. You know that, right? Like you start off on survival mode and then you just end up just putting your foot in your mouth and you just end up dying just because of just saying something you shouldn't say.
I don't want to die. I'll stop talking, Queen. I will stop talking.
You gave me the floor and asked me who should go first. I call out Mark and then you bring back Matt about his Pfizer analysis.
Thinking we could get the judgment there. Maybe Matt leaves. He gets his head chopped off.
I did once say that if his mic goes out while he's doing his analysis on the Queen's Court, he would have his head chopped off. But technically, his mic did not go out while he was doing the Queen's Court. So he may or may not survive. I'll let you go next, and then we'll see. It's between you and Matt at this point.
Now, this is not usually a good selling point, but Exxon was my pick, so you're going to get my second choice right now. And I heard earlier, and I've been thinking through this. There's several different ways I want to approach this. I got a couple of different that were on my brain for my second choice. Number one, earlier you're talking about your exposure to materials, energy, and those types of the market. I don't know how much healthcare you have to keep your portfolio balanced. UNH has been a juggernaut, so I was considering the UNH play. I also was thinking about the way that you were discussing that earlier, and Target just has a beautiful technical setup for a short-term trade. So after thinking through that, seeing the analysis from Mark and Matt, and also trying to do the best I can to keep my head intact today, I'm going to go with Target. And I'm going to approach it from a slightly different angle. You're adding and you're getting these ideas around fundamentals, which are sound. Mark's breakdown of Exxon Mobil, what's happening. I really loved hearing his response to Exxon's report last week, because I'm an investor in Exxon and I trust Mark's instincts and his read and his judgment. So when he tells me he loved the report, cost-cutting measures, that gave me the old stamp of approval on Exxon. One of the reasons why I do even like it as much or more than I have for some time, and I do own it. So Exxon's already on the table. You also got the Pfizer analysis, which frankly is not a short-term real analysis. Pfizer is a wonderful long-term fundamental company with the year projection of earnings growth in front of it, as well as the revenue guidance being increased like Coach Matt talked about. Those are two kind of fundamental ideas with the technical kicker. They also do have technical kickers. But here's what I love about Target this week. Number one, Coach is approved. Okay. It was on the option report over the weekend. Coach Tyler, Frank, Matt, myself in the report meeting. We went through the process. We bird dogged that. Number two, I know how much the Queen likes breakouts. Okay. Especially on fundamentally sound companies with liquid option chains that you can use a lot of different tactics with. And when we're talking relative strength here today, Coach Emily, what color are these candles right here?
They are green.
They are green and the market's red, and yet Target is holding its breakout channel, not giving it up, not going back below yesterday's low point, which was the breakout point. You got a couple of different technical levels to pay attention to here. You'd have to map out a trade. Number one, we did have this breakout zone at $210, currently trading at $210.69. You come down into the intraday chart. There's a couple of things I think you could map. Number one, just a new trigger above yesterday's high. Let's say you didn't catch the trigger coming into Monday, right? You wake up lazy on a Monday morning. You didn't do your routine yesterday. You missed it. There's a new trigger right on the chart that absolutely is tradable for a swing trade, Coach Emily. So my suggestion and my offer to the Queen is you've got your fundamental technical picks that are longer term cash flow from the other two participants. They did wonderful analysis. I'm going to bring you a little different flavor here for you to add to your short-term idea list, and that's Target as a swing trade off of the breakout, off of the pivot breakout, and after holding yesterday and today on relative strength. My Queen, that is my analysis.
I love Target. You know, I love me some Target. I love where it's sitting at right now, that all-time high yesterday. And like you said, if you missed the breakout yesterday, you can easily, reset, put that trigger on out above on yesterday's high. Now, you don't listen. I gave you the sector that I was looking at. XLB. I threw you a bunch of examples
Respectfully, my Queen, you already have exposure in that sector. I wanted to give you a little bit of a different.
I let you go last so that you could at least try to go and look for something in basic materials so you can bring me something from the basic material sector, but you failed me once again. And on top of that, you killed me on Among Us on Friday, so I absolutely have to chop you off today. So This is a revenge, nothing to do with Target, love Target, but this is just more a revenge kill for me for what conspired on Friday night. So Tim, you get your head chopped off.
You know, Jonathan Julian says, Tim says, if I die, it's not with words I never said. All right. I might just be talking too much here, my queen, and over analyzing. Sometimes over analysis
Yeah,
obviously can
over
get you
analyzing.
cut.
Go for the easy stuff. I gave you a nice layup in XLB. You could have found something easy on XLB, but I still love Target. But yeah, sorry, somebody's got to go.
C'est la vie. All right. Well, that is the Queen's Court. And that actually is our show here for a Tuesday. We're going to start wrapping up. We've lost our host, the young tan man as well. So we're going to start moving into final thoughts. Marky, obviously markets are actually stabilizing intraday a little bit as we've been doing the show, but still got to find support, test support. What's your read on the market? Last thoughts as well.
Listen, on technical sell-offs where there's not broad-based fear everywhere, it's a pretty easy call for me. Now, I don't have a lot of tech exposure to begin with, but when I have a support break in an area of the market, I reduce exposure. There's a lot of margin being abused out there. We're at record high leverage levels by so many measures, and you never know how something might spin out of control in an area. And so when a support level breaks, you reduce exposure. It's that simple from a broad market top-down and analysis perspective. And then eventually when you get stabilization, and you don't reduce all exposure, you don't do anything radical, right? But, I really, really do think that moving forward, that this is going to be a stock analyzer's market. I think strong technicals combined with strong analysis is going to create some winning situations this summer. We could very well be in a range-bound choppy market this summer. I don't know the future. I know that's a possibility because guess what? Sometimes range-bound choppy markets occur. Even in those range-bound choppy markets, there can be lots of opportunities. And I think the combination between three things: learn to read charts and come up with a plan based on chart signals. Two, have strong analysis, and we have a great community for that, with lots of perspectives to give you great analysis and ideas, students, coaches, everyone. And then three, have a trading plan that does take advantage of strong conditions and reduces risk if you have broad market support. If you do those three things this summer, you're going to have a great summer trading. I really do believe that.
Coach Emily, final thoughts from you?
My final thoughts are, last night we had a special webinar and we were talking about, using that portfolio journal that we provide for our students here on Tackle, and using that journal to kind of weigh where your delta is and making sure that you are in par with what your market posture is. And, we talked about, when the markets are, are getting bullish and you start to feel like maybe something's a little off and you might want to reduce that delta. We talked about that. And we also talked about always having cash on hand for when you need to buy the dip. And I think with tech, the sell-off that's having today, there might be some opportunities, obviously not today, but wait for it to find a support level whenever that is and wherever that is, to be able to get in and get some exposure in tech if you do not already have any. But using those journals to really, measure where you are in terms of your delta. And like Mark said, if you need to reduce it, you either, and if you're in tech, you pretty much got taken off automatically today, but that's one way to reduce your exposure. But using those journals to really map out and kind of see where you are, in your actual accounts versus where your bias is in the market, and make sure that you're in line with that. Otherwise, days like today when, you have the tech sector taking a hit could really hit you on a surprise day like that.
100% agree. And I did drop the link in here for everybody out there to download those trading journals. There's 3 of them as a part of the bundle. By the way, if you're a pro member at Tackle Trading, you get access to those as a part of your membership, as a part of the subscription that you pay. And there's one of them in there specifically, Emily, I think is one of the most underutilized tools in our pro community, called the Portfolio Journal.
Absolutely.
And there's some tutorials on our website as well as on the YouTube channel, guys. But if you want to get better understanding of what your risk is in your portfolio, start to understand tools like this and delta weighting and beta weighting, and working with coaches through the shows and the webinars to help you better understand these tools. So great pitch there, Emily. Great reminder to everybody out there to get those journals. And then the last thing I want to talk about, we had a podcast yesterday, and I dropped the link for episode 423. There's an old myth in the market called sell in May and go away. And quite bluntly, we broke it down. We kind of debunked it a little bit, talked about some of the data that's actually happening in the last 20 years in the market in terms of May, June, July. July is one of the most bullish months in the market, Emily. And we even had a little catchphrase contest. We were going to come up with all these silly phrases, like sell in May, go away. It's clever, right? Matt put it on his Twitter. I like the phrase buy in July and let freedom fly. And he liked,
okay, I like that.
He liked buy in July and let the fireworks fly. Matt's Twitter, go find it. Somebody vote on it. Well, let's hear from you guys what you think. Because
I like them both.
I like them
Yeah,
both too.
I like them both, but I like the fireworks flying because everything is going to the moon, right? So
They're in shot.
And
It's
the thing
exciting.
about it is, like, there's somebody out there. See, you sell them in, go wait it. I mean, that's what's like.
Confirmation bias.
Like, listen,
if
you are based on superstition and non-data based analysis, you're probably not going to survive long in trading.
Save the superstitions for the sports, not for trading.
That's right. All right. Outside of that, guys, we are done here today. And Mark and Emily, I don't know who is now the host here in our webinar. So I think if it is you, Mark, you have to turn our live stream
I got to learn how to do this. Anyways, everyone have a wonderful, wonderful, wonderful day. And Coach's show tonight, 8:30 Eastern. Tyler Gregg going to talk about adjusting stop losses. It's going to be a relevant topic for tonight. Take care, everyone.